the 4-hour price chart for Amazon.com Incorporated, stock ticker AMZN. So, as we know, Amazon released earnings last night. This was also done roughly right around the same time that Apple released earnings. But the main story for the market yesterday was the Intel earnings release, where there were several major surprises in that report, which did send stock markets into a bit of a tailspin. And now we're sort of seeing the consequences that are becoming widespread throughout the market as a whole. So, at the time of making this video, the stock price is down roughly 9% in Amazon. So we are seeing that this is a broad-based, selling pressure that's starting to unfold here. And we do need to look at this chart a bit more closely so that we can identify some important support and resistance levels, so that we can identify trading opportunities for this stock going forward. So if we drill in a bit here to the hourly price chart, we can get sort of a better sense of this more recent trading range is starting to develop here. As we can see, recent highs came in just above the 190 level, so we were able to break outside of this dominant trading range that we have been watching for the last few sessions. Specifically, this high came in at 190.60. As we can see here, there was a bit of optimism that was surrounding this stock prior to last night's earnings events. This was a significant break to the top side because, as you can see here, if we sort of move in a bit more closely, we can see here that the share price itself did overcome its exponential moving average cluster. Finally, it took some time for the stock to break above this 200-hour exponential moving average, which is this blue line here. Previously, we were seeing some resistance in this area. This was coming in at roughly 187.60. But there was some optimism surrounding the potential for Amazon's earnings report heading into the final parts of that session, and we did ultimately see a break higher. However, if we look closely at this price action here, there is some cause for concern, or at least some caution, because even though we did break above this sideways trading range here and above the exponential moving average cluster, we did not see a daily close above this sideways trading range. So we did see some a fairly strong break of resistance here, which came in at 189.38. But the lack of ability to close above this range level did sort of raise some warning flags for the stock, and this did suggest that the stock had the potential here to trade under pressure, if we did see a negative earnings release. Overall, Amazon's earnings report was not terrible. There were some points of weakness, but overall, the earnings and revenue figures both showed relative stability. I wasn't very worried. I wasn't very concerned about those numbers in particular. But when we look at the broader context here, the overall, all of the earnings releases that were reported yesterday, on balance, the results were mixed enough that we did start to see some declines there that were more broad-based throughout the technology sector. Specifically, we can see that Intel has made some major cost-cutting moves in an effort to stabilize its longer-term outlook and continue on its path toward creating foundries inside of the United States. The company is going to be reducing costs by $10 million, laying off 15,000 employees. And then in addition to that, we're seeing a sort of historical moment here because Intel also decided to suspend its dividend, which is a normal dividend payout that's paid to investors. This is a bit of an anomaly within the technology space because most companies do not pay dividends. Intel was sort of an outlier in this respect. Intel has traditionally paid a very strong dividend for people that are interested in investing in tech stocks. But as we can see here, the company is currently having trouble paying for this, and this should start to lead to some selling pressure, at least in that stock. But as we're seeing here today, this is leading to more broad declines throughout the entire technology sector. So specifically, when we're looking at Amazon, we can see that these Intel results didn't directly influence the company. But this has led to broad-based selling pressure that is being seen throughout the semiconductor space and throughout the technology space. Currently, the stock is attempting to bounce out of oversold territory, as we can see here. If we sort of drill into the hourly reading in the relative strength index, And then we are seeing some evidence of buying activity here as well. But for the most part, we have seen significant price lows here that have started to develop as share prices gapped lower. So overall, here we can see that this price gap extends from roughly 181.97 all the way down to 168.80. So this is a fairly significant price move for a company that would fall into the Mag 7 category, and would be considered a mega cap stock. So it's not normal that we see price gaps that are this substantial. Clearly, this is a response to some of the weaknesses that were present in Amazon's earnings results, because that company did not completely remove this concern related to its own earnings performances during the last quarter. Um, so there were weaknesses there as well, and when we're seeing broad-based selling pressure like this throughout the market, it does become, a much more volatile and unpredictable trading situation, given the fact that even the largest names in the market are trading under this type of selling pressure. So currently, the price levels that I would be watching come in roughly. I would call 177 the next level of major resistance here. There is a significant price gap that is going to need to be filled, but this really remains to be seen today whether or not this is going to be accomplishable, possible, plausible to accomplish at any point today, because we are coming into the end of the trading week here. Um, so the market is going to be closing here somewhat soon, and then this is going to most likely create a negative close on the week. So the potential here for regaining roughly $11 in share price movement at this point does seem a bit unlikely. I mean, this is a major distance that the stock would have to travel, and given the broader selling pressure that we're seeing throughout the market, this is starting to look unlikely at the moment. Currently, in order to recover these prior losses, we would need to see a break back above 190.50. This is quite a ways away at this point. We're looking at almost $25 in share price movement that would need to occur in order for that to happen. So, the market is going to have to deal with all these negative trading volumes that we're currently seeing here on this price chart. These prior lows came in at just below the 180 mark. So the potential here for the stock to make a recovery here near term is looking more and more minimal. We are going to have to revisit this entire Fibonacci analysis at this point, because these earnings performances have really thrown things into flux. As I was saying previously, it was my view that this trading week was going to be the most important trading week of the entire year, and it does look like this is turning out to be the case. I do plan on doing a more in-depth coverage of the Amazon earnings report itself. I just wanted to do sort of a brief update on where share prices are currently trading. So I do suggest that people that are long Amazon or considering long positions in that stock check back on the channel soon here today, because I will be releasing a more in-depth coverage report on Amazon's most recent quarterly earnings figures. So here's the current price update for Amazon.com Incorporated, stock ticker AMZN. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.